All right, so Vertiv gained significant orders in its latest quarters as enterprise buildouts of AI data centers really accelerated. But management told investors to temper their expectations a little bit about the growth going forward. So I wanted to highlight some interesting facts that investors should know about Vertiv going forward for its prospects over the next few quarters. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in talking about the acceleration in orders in the first quarter, management said that this acceleration brought into first quarter some orders that we expected for future periods. In other words, they were expecting to gain these orders, but in later times, in the second quarter or in the third quarter. But it turns out that most of those orders happened in the first quarter, as some of the customers really just wanted to get the orders in and lock them in and have them done and completed rather than waiting for future periods to make that order. So management will caution us in a little bit. I'll talk about that next. So they're saying we anticipate orders will remain strong, but I want to caution that 60% order growth, which is what they experienced in the first quarter, is not the new expectation. In other words, investors don't expect us to deliver this type of growth in orders going forward. This was just a one-off event because of these factors that happened to work in our favor in the first quarter. Still, management saying, if we see orders that decrease from the first quarter to second quarter, that would not be a surprise. That would not be a surprise. So, in other words, that's more likely than not that orders decrease in the second quarter sequentially, not year over year. If you compare with the previous year, they say that we are still expecting good order growth compared to the previous year's second quarter. Okay, so year over year, they're still going to experience growth, but given the surge in order growth in the first quarter, it's likely going to decrease from that point. So that helps us understand the direction of order growth for Vertiv. So we see big increases year over year, but in terms of where it is from the previous quarter, we see it kind of leveling off from that area. So interesting, and it really highlights what they expect in terms of their business going forward. I thought this was a good explanation from management here for investors to consider. Now they go on to talk about their manufacturing capacity, and they say that they're comfortable with the investments they're making. They have 22 manufacturing plants globally, and they previously told investors that they're going to spend about 75 million to 200 million in capital expenditure for this year. And now they're updating that to say they're going to be at the high end of that range. So you can eliminate the bottom part of the range, 75 to 200. We can pretty much now say it's going to be something like 175 to 200 million in capital expenditure for 2024, which makes sense if you match it up with the order growth, right? We noticed, and they said that 60% increase year over year in orders for its products. So it's understandable that given the better than expected order growth, that they decide to increase their manufacturing capacity at the higher end of the range that they initially anticipated for the year. And if order growth remains elevated, I wouldn't be surprised if capital expenditure comes in a little bit above 200 million as well. Because demand is so strong, they might want to build out additional capacity that they were perhaps delaying to start in 2025. Maybe they bring it into 2024 to get their supply up for the upcoming demand increase. As they say, they continue to see momentum with artificial intelligence related orders. AI related orders, we did see the pipeline for AI projects more than double in the last 2 months. So artificial intelligence is significantly boosting demand for Vertiv. And they say that the next generation chips will require liquid cooling. And that's pretty much what I've heard from several sources, that liquid cooling is going to be the way to go here as a helicopter goes by here and disrupts our video. But they're now seeing that because liquid cooling is what's required for these next generation GPUs from NVIDIA and others, that plays right into their hands. And so the supply chains continue to operate as expected and not without an occasional bump. But this is a big difference from 2020, 2021, and parts of 2022 when supply chains were totally disrupted. There was long wait times, there was constraints across the board in shipping, in capacity, in labor. There was just supply chain constraints almost everywhere you looked in those 3 years from 2020 to 2022. 2023, those eased significantly. And 2024, what I'm hearing from most companies is that supply is not a constraint. Supply chains are working as expected, and only the very few companies are experiencing supply chain constraints given their demand is exploding. A company like NVIDIA has for several quarters now said that their demand is far ahead of what they can supply. So they're one of the companies, and that's understandable because their revenue is growing so significantly and from such a large point, right? They're growing off of a base of $20 billion in revenue. So when you're growing 100% off of that base, that's a huge increase, both in magnitude and percentage. And it's understandable to have some supply constraints with that level of growth. But for the most part, supply chains worldwide have eased. But that being said, the geopolitical environment is becoming increasingly complex. You're having companies prioritize supply chains from certain regions and block certain supply chains from reaching other regions. And so that's leaving businesses with an increasing complexity of operations where they no longer can just choose, well, where is the lowest cost area to produce? They can't just think like that anymore. They now need to think, well, what risk am I taking by having my manufacturing in regions with elevated geopolitical risk? And is that risk worth taking to achieve the lower cost? And so that adds an additional factor for businesses to consider, a factor which has been hard to predict, right? It's hard to predict the political mood. Right now, the political mood is against going offshore, is against going to Southeast Asia, against China. And so that's the mood right now. 10 years from now, it could be different. It could be a mood of, let's try and bring our supply chains cost down, because right now it doesn't make sense to have our supply chain in this region where it's much lower cost to have it in another region. Why would we do that? And so those moods change and they fluctuate. And so for business, you've got to be able to play those changing moods effectively. And it's just another layer of complexity to consider. So these are things that I thought investors interested in Vertiv should know. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.